All right, we're live.
Hey, good morning, everybody. It's Tuesday, August 6th, and I've got 8:02 Central. Anyway, you are looking at the SP 500 4-hour chart incorporating Globex sessions, and that is both overnight and pre market. So I purposely bring it up so we step back and we look at, it's really critical that when you go through each day, that you step back and just kind of relook at, all right, what did we do yesterday? When was the last time we were visiting this area? Any areas of significance? So a couple of things. I mean, we know that we had our sell off on Friday, and then we know we had all of our Armageddon fears Sunday evening going into yesterday morning. So so those are the obvious points of interest right here. But then it's like when we came down, we were searching for a bottom yesterday. We were You can see that this was a big area of interest that was back in April through May, and that was a heavy area of congestion that really built up for 2 weeks before we started, moving higher. Then we had a pause, a little breakdown, and the move higher. All right, fine, that's well and good. So here we are today. So we did establish a level yesterday that we did bounce off, and it was one hell of a bounce. The Nasdaq, is an example, I believe was down well over 1,000 points, and it retraced by at least half, and at one point almost 2/3. So that's crazy. So yesterday, our game plan was with the Armageddon fears. It's like you don't you can't trade scared. Trading scared is not a thing. It's a train wreck. You're going to lose money. You won't have any confidence, and it's hard to make decisions. It's hard because you haven't established areas or some sort of process methodology where you can define the risk. Well, if you're in no man's land, how do you define the risk? Yeah, great question. The first step is sometimes you don't participate, and you let the trade germinate. You let it try to establish levels, and then provide you some information. The market will provide you information on various levels. And the other thing you do is, if you are comfortable about a few levels and you're seeing a few correlations of trade, is you quickly go to quarter size, if not eighth size, because the amplitudes of the moves are much wider. So whereas we will get in trades where we typically look for very extended areas, key areas of interest and areas of confluence with various, you know, trading methodologies between the three of us and a few other people in the room, and we look for correlations with the Nasdaq. And with those, we're able to trade half and full size, where we're able to define where's the trade wrong. The trade's wrong in basically 2 to 4 points, and you then adjust your risk accordingly. You know, if it's a few extra points, well, to absorb that extra couple points, you automatically go to half size. Well, if it's going to be 6 to 8 points of risk, you're now going to go to quarter size. And if it's going to be greater than that, you got to drop down to eighth, or you don't trade at all, because that's the only way that you can manage. That's the only way you can manage your risk. Excuse me. So you reduce size to absorb the exposure of the move. So yesterday, the other idea was, besides immediately going to reducing size, we knew that a big part of the trade money had been made on the short, the ride down Sunday evening, and we had a lot of people in the room that really took advantage of that. There were key levels we passed through, so there was just a ton of money that was made. And then when we opened up, we weren't necessarily certain where we were going to kind of, bottom out here, but we eventually did. But we identified the 5200 area, 5200, 5205 is the first significant level of resistance, and we all took shorts off that area. And on average, they yielded 14 points with, for me, 14 points. I think 10 with one and 24 on another, something like that. And maybe a little bit better. And it was within, I had to have been within 40 seconds. And I traded quarter size. So that was a great trade. And a bunch of the other guys, they were able to spot a few moves and they made some other type of little intraday trading moves more of some technicals. But the other idea we had is that when we were down so heavy, there was going to be some good stocks that were just dragged down. We knew that these were stocks that we wanted to own for our long term accounts, or that could be good for a day trade. Well, both things happened. We went in looking. We went in looking for. The first one was Palantir was the one that was really knocked off its pedestal down to 21, 21, 22. We went in there and gobbled up a bunch of common. We knew they were having earnings yesterday. Nevertheless, that is just a stock we wanted to own, and that thing, it popped, top popped, I think $3, and then the earnings came out, and we're fortunate to kind of ride that and trade it up to about 29. So that really wasn't an earnings play. That's just like a fun a stock that, based on the fundamentals in the environment we wanted to own. We saw that there was an opportunity. The other one was ADM, or AMD, excuse me, AMD and NVIDIA. Dan was all over AMD. I was all over NVIDIA. It was a great day trade. And I had the idea that I wanted to lock in some October and January calls, 110 strikes for the earnings. And that was just one idea I had. I mean, I still think they're probably going to have good earnings, but that was just one idea we had. I mean, they traded up where they're worth 50%. I was able to trade out of half of those to reduce my basis where, my exposure is really rather minimal. So um, that's what happened yesterday. That's how we traded it. That's how we adjusted our size, and we knew there was blood in the water, and there was a lot of people were panic selling some really good stocks, and that's just what happens in these big moves. And overall, I think everybody in the room, I think it was great teamwork, and we managed our risk really effectively. Didn't hear anybody any concerns about blowing up anything like that. So that was a great sign. I'm just going to kind of broaden out here just a little bit. Just kind of want to, and I'm now going to reduce down to I'm going to reduce down to a compressed 15-minute chart just to get an idea. And what I'm going to do is going to go on, and because if you see this, sometimes you're looking at this stuff and it's like, what am I looking at? Well, I look at it the same way. So I just remove all the drawings. So we can now we're just breaking this down a little bit better from Thursday all the way through Friday, and then the Sunday night we can see the moves. So off of the move down here, so we can now see overnight what we've been doing, how we traded. So we basically have traded up to the upper part of the range from yesterday. Excuse me. In this 53 even level was clearly an area of resistance, and it was definitely an area that needed to be broken down before we proceeded to move to those big and new lows yesterday morning, or very late Sunday night. And we're now in this range, so it's a separate thing of like, okay, so now we're there. Well, what now? What do we do? Well, the first thing I can see is, if we want to return to the scene of the crime, and the scene of the crime was, there's this gap at this 53.30, this area here. There's a big gap, and that's a big magnet. Excuse me. A lot of people are thinking that there's a high chance we can go fill that. Well, I tend to agree with them. It's just a magnet. That's how our markets work. So if we trade over this 53 even level, excuse me, I'm so sorry, guys. If we trade this 53 even, is going to continue to be resistance until it's not. It's that simple. So don't fight it. Don't fight a breakout. You will know if we make a move to the upside. Basically, it would be just kind of trading through this 5306, 5309 right in here. We have to get through this little bandwidth here. and that gives a chance for that move to go fill the gap. And then right at that gap fill, that will be a short opportunity. So you'll have an initial short at this 53 even, the overnight highs, and then if we move through, there will be another short opportunity filling this gap. Now the other possibility, well, you gotta. There's always more than one or two for any given day.
Gov, I have a question for you, and I'm gonna just interrupt
Go,
you because
go ahead.
it's something I'm not sure about. And so I'm looking at the same thing, and I'm looking at the gap here at ES 53.57. So that was the gap from futures open on Sunday, right?
Correct.
How do we? So then there's the gap from the SPX. Are those going to line up?
They typically do. There's a lot of people just trading the futures, and that's what they're looking at. I'll go to answer your question. So because right now, let's see, where where was this?
Because the
The
spread over
spread
the
was trading
weekend is
29
gonna.
yesterday.
It was 29. You said.
Yeah, I think so. Where was that less than that? What do you guys have?
No, I think you're right. Um, the only reason I ask is because when you have the sort of futures open on Sunday and then whatever it is 13 and a half hours later you have the SPX open, that spread sort of may adjust. So all of us, and I know we have some new folks on in the call, we try and take the and be as precise as we can so that we can reduce the risk that we have for slippage essentially. And so the question I had is, because it was a Sunday open into a Monday, to me it would seem like those gaps would be misaligned by a point or two, which obviously it doesn't sound like much, but when you're trading and trying to be precise, it is.
No, that's a great question because I'll look at the gap on the futures, but I will go quickly over to the SPX chart and I refine my ES level. So at times, if that spread has come in between the ES and SPX, I will use the gap on the SPX because if we're in real time trading hours, the algos have flipped to the real time trading session. They will actually hunt down the SPX gap. And sometimes in that future, that little gap in the futures will actually remain open for a bit until we kind of consolidate. So sometimes that will just remain open for a little bit longer and then it is eventually filled. But on the first move, typically it's going off of SPX. But if the spread has come in a couple points, what I do is on those gap fills to accommodate your question, addressing that, I basically will use reduced size on the algo reaction on that gap fill because there could be a little bit more slippage right in that gap fill because there's always that thing. There's the wick gap, the bottom of this range. We go back and revisit that, and then there's this area. It's like on the SPOOS is 53.45 all the way up to the VPOC, which is like 53.59. So that's like a 10-point range already. So off of SPX, so now you got this area. So it's going to be the lower part of that. The trade on Friday was the 53.02, and then then technically the gap is like around 53.42. Let's see, what am I? Hold on a second. Hold on a second. Let me make sure I'm three. Yeah, yeah. You can see actually what I'm going through here. It's showing on the SPX right at there's 53.42, and then you can see on the left chart the SPOOs. That's where 53.42 is, and there's another 10 points there. So the really all you can do is I find there's a high percentage of the time it's the SPX gap is the one that's the most critical. That's what it's going to hunt. But I then adjust my size and I look for the reaction there because there could be a little bit more slippage anyway. So the algo might want to turn around and just flush out because you don't know if it's going to come in and react off of the bottom of that wick on that closing range or if it's actually going to go to the technical close of for Friday. So the technical close right there, I mean, that's 53.41. So, so I mean, good question, and I hope I addressed that. Yes, they're acknowledging I traded off, I refined it off the SPX, but knowing there could be a little bit of slippage, I use reduced sizes on those things. But I definitely look for the reaction. I narrow down to like a 30-second, sometimes a 15-second chart just for that entry right in there. So that's pretty much
Yeah,
where
it's
that.
not often we get that wide of an ES gap, um, unless it's contract roll, etc. So it's sort of a bizarre situation where, the last thing we want to do is be right but wrong. And
Right.
when you have the differentiating, and the reason I ask the question is because always learning stuff, and um, asking the question. Gov knows these things much better than any of us do, and that's a bizarre one because we have a Sunday gap down in the futures, which is not usually that large.
It's not usually that large. I agree. What I will do is when we have the mark, when we open, I'll update what the spread is, and I'll update an ES and SPX chart, kind of identifying the levels of like what they would be, so people at least can use that for their own purposes. I'll do that. Um, Actually, that's a pretty good transition there, Dan. What you want to take from there? And again, I will update it and throw a couple charts in the room.
Morning, everybody.
Good morning.
All right. So I have, and actually, I'm going to go to little out here. Gov's really good about the um, sort of very immediate future, sort of the levels that he wants to pick out and the levels that he's looking at to get long or short. I want to sort of not reiterate what he said too much, but I want to go and zoom out a little bit further here and talk a little bit more on the sort of technical levels. What happened here, and where are we, and where do I think we're going to end up? Sort of first thing you're going to see here is this is the daily chart of the ES with volume profile here. I'm going to zoom out a little bit here. You see the big red line. Oh, let's zoom in because we want to focus on this area up here. Should adjust here. There we go. So from this area here, this big box, which is where we are trading in, here, the volume point of control is 52.54. We are trading 14 points below that. Very important here because we are in a high volume sort of node, and if you follow us, we use volume profile a lot because it tells us where things can slow down and accelerate. Right now, we're in a slowdown area, and while we've been very, very swingy in this area because the VIX closed yesterday at almost 32.50, we're going to be swingy. But remember, we're sitting on this volume profile sort of high value node here. So that tells us that this is sort of going to be a little bit magnetic in this area until we separate one way or the other. Now, separating one way or the other, which way could that look like? We've got the 100-day up at 53.48-ish. We got the 200-day down at 50.50, essentially 50.48. We're sort of dead center in there. Pretty scary area for bulls or bears, where this could go either way. My lean is that we probably are going to churn in a big wide range from the 100 to the 200 for a while. And that would be my best guess as what we're going to do. I don't sort of envision a scenario where we just go like that. I just don't see it. I don't see a V-shaped recovery coming after a VIX blowout like we haven't seen since I think COVID. Maybe 2018. I can't remember what the VIX got to in COVID, but that was a VIX blowout. That was I believe that was either the highest or the second highest VIX open. I think it opened at 120% or something, 140% that I've seen. Don't usually see the VIX gap up that big, and I think what exacerbated it was the weekend, right? So now here we are at this sort of volume point of control back from March. This is all the way back from March. Then we came down and actually we tested this area back in May. We wicked down into sort of no man's land here. If you notice why we moved so quickly through there yesterday was look at the low volume area here. That's why we wicked up and back so quickly yesterday, because we got into this low volume area. I would not be shocked if we need to fill in this node here, which is under 5,200 all the way down to another 50 points or so, and have to go auction in there. That would not be a shocker to me at all if we did that. So now let's go back and let's look at the hourly here. There's a couple of key levels that we saw reject last night, 53.0506, and we saw a key level of this 28 hold overnight. That was yesterday's volume point of control ish. I mean, and when I say ish, you have a VIX of 35, you have high slippage. So you can't be as, you have to sort of fish with a hand grenade and not a spear when the market's like this. And in order to do that, you have to reduce your size. And when you reduce your size, you can weather a wider stop. So those that have been here a while know we trade with tight stops, but we've also been trading in an environment where it was conducive to trading with tight stops. A 10, 11, 12 VIX, you can trade with a 2-point stop. You can't trade with a 2-point stop with a 30, 33 VIX. It's recipe to just continue to stop out and ruin your psyche. So today, I might try and long this 28 area. If we come up to 06, might try and short that. The big play will be is if we close this gap, I'm going to look for some downside options for a week or so out. So that's sort of the scenarios I'm looking at right here. Is if we blow this 28, I'm going to take my stop. I had a great long from futures open last night, 30 something points. So I have a huge credit I'm working with. So I have no reason to press, to push. I can wait for the price to get to the areas where I'm comfortable taking a stab. If we were to break this 28, I mean, you've got another 30 points down to 5,200. I mean, and look, it slipped there. It slipped on this candle here back below it. So that's why we keep saying, you've got to adjust your sizing when you're dealing with a highly volatile market. So those are sort of the areas I'm looking at on the ES. I'm going to pull up the index everyone loves to hate, including me, and just look at how this thing got absolutely torched. But we're now back at sort of support area here, down in this 200 range, right? The trade is done. We made our money. Let's move on. We will see if there's another setup here, but we got this thing from 226 and covered the remaining short yesterday at the open. It's a pretty damn good move for a couple of days. Um, I'm taking it off my screen for now and moving on with life as we've come back into this area of congestion. I don't see any setup here that is worthwhile. No reason to keep trading it just because I want to be more righter. Um, and I was right. I win. I'm gonna move on. Anyways, there's this one, Nike, still constructive. Broke below the low yesterday that we were watching and reclaimed it. Let's go to hourly. So we broke below the low that we were watching as our stop area, but immediately reclaimed it. I actually was looking at sort of breaking down this level. I believe it was all the way back from 2018. This was a daily support level. And look where it bounced. Almost dead on it. I put that level back in. Actually, I think it was a monthly support level, if I remember correctly. Yeah. From here. So, let's see. Go back to here. We reclaimed it. We're back in this area here. Still constructive, still accumulating this. We've had a pretty big market downturn the last week or two, and it still looks good. It's still holding, and I think it's a good spot to add it. So with that, I will turn it over.
Good morning. I'll try and run through pretty quick here what I'm looking at. Yesterday, I pointed out this inverse head and shoulders here, which gave us a target measured move up around this 5,400, and we only got to just over 5,300, so we got about halfway. But potentially see something larger setting up to, we had this big down move, we had a retracement back up. If we come back down, we could... Did everybody else just hear that? I just heard like a siren or something. Oh well. Anyway.
The open.
Yeah, just wondering where that came from.
No idea, but...
Maybe it was David's computer.
I'm not doing anything. Don't blame me.
So potentially there's a harmonic here setting up. So I'll see how that develops on the smaller time frame. If we jump in, I did see something here also potentially setting up. So we'll see if we get this to start curling here. If I take my measurement tool, let me see what that looks like. So we got to get this to drop a little bit lower into this range, like 5220. If we came down here, it would actually still work at a test of this 5200, and then look for that leg back up. So let's see if we get a retracement here. Yeah, if we kind of lose this 5230 area, there's a good shot that we come back down and retest this 5200. So I'll be looking at that on the ES. Some key pivots that I have. There is actually we have a pivot right here below, so we actually got to lose this like 5227 for more downside, and then we can target this 5200 5205 area that was pretty key yesterday. And then on the upside, the key pivot levels that I'm looking at is the 72 to 77, to 82. So 72 to 82 is kind of key, which was key yesterday. And then obviously breaking up over the overnight highs at 5306 will bring up those higher levels that the guys mentioned into that gap fill. So we're getting a curl back up here. So this measurement doesn't quite work for a harmonic, but it's still sort of in the spirit of. I would have preferred that it slipped down, but we have this daily pivot here that seems to have held. So it looks like we're going to get a push up here, and then you can pop those fibs in and then look for like a 55, 64, 72 on the upside. On the individual stocks, I'll post some charts in the room. There was nothing imminent, but some things setting up perhaps in N phase. Home Depot, I noticed this M-shaped harmonic, which is bullish, and we're kind of set on the 50-day and the 200-day here. So maybe a play in that. Hims, I added some last night at $16. This is just more of a long-term play. AMD, I think is getting ready too. We've got this MACD curling, maybe not an imminent play, but I think this is getting ready for a leg up. So I'm going to jump off because I like this area for a trade. So I'm going to see if there's something I can pick out here. But we will be in the chat. If you have any questions, let us know.
What area is that you're looking to short?
If we get below this 27,
Yeah.
I think we're going to come back down to this 5200 zone. So,
Yeah, I don't think you're necessarily wrong. I am going to try along there. I missed it by a little bit there, but
so
we'll see.
it's in an interesting spot. So it looks like we're grinding a little bit here. So let's see what transpires. And it wouldn't be a shock to see just a lot of grind today. After yesterday, we just had these wild swings.
yeah,
today's
the VIX gap down to 16% down. So I could see some of that coming off today.
So of note on the SPX, so because we had a gap up, don't chase or fade the gap ups. But you can see where we're kind of hanging out. We hit up around this 52.19 area. That was just kind of a pivotal area yesterday. So if we get above that 52.20, 2022, there's a strong chance of revisiting 52.50, the high of day yesterday. Strong chance. There's an equal chance that right here, we kind of settle out a little bit here. And you notice that we got a gap right back below down to about the 51.86. That's SPX. That's also the VPOC from yesterday. So I wouldn't also be surprised. There's a strong chance of us both filling that gap below as well as retesting this 52.50 area. A break of the 51.65.66 could give us a little momentum to go revisit yesterday lows. Anything's possible. So anyway, just a little tidbit for you there as we just opened. Those are SPX levels.
all right, guys, we'll see you in the room.